What's going on with believers? It's your boy Rebalance with another live price example. So I started the recording a little bit after 8:30 today. There's no high impact news coming into the marketplace, and so there was really no rush to get started with the recording. I figured it may be a longer one, so I didn't want to start at 8 o'clock or any sooner than that like I had before. But the only two assets I will be cycling through in this one are going to be the E-mini S&P and the dollar index. And so what you see there was me annotating that 15-minute inefficiency that could act as support if price dips down into there on E-mini S&P. It has engaged buy side for my New York session model. And so I'm interested in how it delivers lower and how it respects or responds to that range there. So that was the first tap into it. I was just measuring out that low to high range on that most recent leg and price, just looking at where the 50% was, because I would be more interested in taking a buy there if that inefficiency was below the equilibrium of that range, but it wasn't convincing enough for me. So you probably have to pause to read the things that I typed there. But the main thing is at this point, that 15-minute inefficiency is a potential problem area for looking short, although buy side was engaged. And so the method here is to cycle through the different time frames and see if an entry signal was offered. Now you can see that I was typing in that the M3 offered it, but I saw it too late. So there's a thing called fear of missing out, FOMO for short. So I've worked really hard to rid myself of that. There's no reason to. This is the third day in a row, like I said. So a lot of these things repeat. There's no reason to feel like there won't be another setup offered later on in the day or another week or even another month. All right. But so notice how now I'm just annotating how that current low that it made at that, but well, outside of the other, right, 15-minute inefficiency, there's a lot of interest in people buying that, and it hasn't reached any levels of importance to me. The only thing it's done so far is taking out the low of that yellow shaded area, but I'm anticipating this orange line as well as the blue line lower that says sell side liquidity to be potential targets this morning. And so you see now it traded below that low, and it finally trades into and below that orange line. And so looking at it from multiple time frames here, like I said, you'll have to pause the video to catch the things that I'm typing in there. But I'm watching how the dollar chart traded into its buy side liquidity, which was April's high, so last month's high. It finally was able to reach that, and with that being delivered, it's very possible for the dollar to now begin a retracement because that's a monthly high, usually at monthly, weekly, daily levels. It's very reasonable to see a price retrace once it reaches those levels. There's lots of liquidity resting there. And so what I'm seeing here is an aggressive push higher through that initial, well, that lower, right, 15-minute inefficiency. And then also I've marked up that 5-minute inefficiency as well as that 4133 level is very obvious, in that same shaded area. And so on the lower time frame, ideally a short-term high being broken, leaving an inefficiency would have been ideal. And so on the 1 minute there, I thought that I was seeing an inefficiency at first, but that candle that I thought was had a smaller wick actually had a pretty large wick that I wasn't able to see for whatever reason at first, and so that's why I said I was mistaken there, um, because that would have been a short-term entry signal for the reversal back higher, potentially running out the the high that it created so far, or even just back up to that 15-minute inefficiency, because once it left it, it never came back up and retested it on the 15-minute time frame. But so right here, just annotating how price is having a hard time getting through that 5-minute shaded area as well as that 41.33 level. And so I also mark up several ranges to show the equilibrium of them, because price does tend to consolidate or move sideways around equilibriums. What it's doing is engineering liquidity. It's 50-50 basically, and as it's, trading sideways, there's a lot of amateurs, people that don't really know what they're doing, are going to be placing buys and sells, and so there's going to be buy side above the range and sell side below the range. And so it broke out to the upside. As you can see, it finally was able to close above that 5-minute inefficiency. What I'm doing here is a gamble. I don't feel like anything is high probability anymore. That 3-minute entry was beautiful. It was textbook. It was right along, the lines of my rules that I look for with my New York session model. We had buy side engaged, price displaced lower. It left that inefficiency to offer an entry. It traded back into there, and then it delivered to a couple of objectives lower. The first one being the low of that yellow shaded area. There was that M15, right? Inefficiency. It traded to and through that. So somewhere at or inside of that range, right, was a potential exit for partial, as well as that orange line. Now, all of those areas were identified prior to the market delivering to them. And so that's why it's important to look to the left and identify potential speed bumps in the market for any trade idea. I feel like that's best to take partials, because nothing here is guaranteed, right? As much as I know, as much as I've spent time studying and getting familiar with the way that price delivers, I'm not going to be perfect. There's really no such thing as perfect. Once in a while, I've shown examples of like price delivery being perfect as far as to the exact level of certain ranges and things like that. But perfection is not something to aim for, more so consistency, right? And discipline with following rules. And so, again, definitely want to pause the video when you see I pull up that call out tool or that text box tool, and just do, give a quick read to what I'm typing at that moment. It'll also give you the opportunity to have the video pause so you can actually see the actual reasoning, as far as like what type of price action has inspired a particular, note to be written. But here I've annotated now those two black lines are representing a 5-minute inefficiency that price would need to smoke, in my opinion, if it's going to continue lower. And at the same time, I'm also watching the dollar chart and seeing if it shows any willingness to trade higher and make a new high. But because it's already reached its objective, which was that April 2023 high, it's 50-50 at this point. So it could just, move sideways and still be very volatile. And so, again, as you can see, a common theme is struggling to get through this 15-minute inefficiency now, just like it was with that lower 5-minute one. And then also with this current 5-minute inefficiency that it's trading in right now, also seeing that it's showing that it's having a hard time, right, trading lower than that level. And so these are just, like I said, lower time frame insights. Just want to, shout out to the believers, shout out to all the homies that always encourage me to be better. And this was like watching paint dry. I was so excited for this to end. But I'll catch you all on the next one. Peace.